So when we talk about anesthesia providers, whether they're solo practitioners or specifically solo practitioners or part of a small partnership, let's talk about the advice that you think is the most important for them to hear from a tax perspective.
One of the most important things that sole practitioners or small partnerships of anesthesiologists can do is they can actually become an LLC that files for federal income tax as an S corporation. If they didn't do anything else, that helps to split their income into earned income as well as a return on equity. Put in tax terms, we can avoid payroll taxes on the return on equity while we still pay them what's considered to be a reasonable wage. But what we avoid on that is some of the, not only the payroll tax, but if your wages are over $250,000, you end up paying what we call ObamaCare taxes, which is an add-on to your income tax. So S corporation income is not included in that income that's taxed at a higher rate. It's an additional 3.8%. And that sounds like a little bit, but some of your income unnecessarily is being taxed at 19 or 20%, basically adding 50% to your tax burden. So just with some basic restructuring, we can avoid some of those taxes and reduce your income tax burden by about a third. So it becomes significant when you add those things up. Another structural thing that we've done is that we help clients that already have an S corporation to form a C corporation with a fiscal year end. And that C corporation's purpose is to help with the marketing, the strategic planning, and with logistics of an anesthesia practice. And we can divert some, and deferral is a big part of this structure, but we can defer some of the net income of your S Corp into a C Corp for up to 11 more months until the tax is due, but also set up some other things and look at some other opportunities, especially for retirement in that new C Corp. And finally, I did want to tell everybody that you have to have what's called a reasonable wage for those that are providing services to the S Corp or the C Corp. So we can't eliminate payroll taxes altogether, but we can minimize that wage to a reasonable amount, and everything that's excess would enjoy the benefits of the reduced tax. And that's really what I have for sole practitioners and small partnerships, is really just some structure that can save about 1/3 of the tax on a large chunk of their income.
Perfect. And if anybody had questions about these things, would it be all right for them to reach out to CCK Strategies?
Absolutely. Okay. They're headquartered in Tulsa. They expanded 4 years ago into the Dallas area because they already had clients in Texas and needed a Texas presence. So I'm the partner over the Texas office.
Okay, great. What's the best way for them to get in touch?
Well, I'd like them to have my email address, and that is Glenn, GLENNH, @cckcpa.com.
Perfect. Well, thank you again.
You bet.
Appreciate it.
Thank you.